Hello, my name is Maria Bezubova and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz! Today is October 13 and this is a weekly markets update. Let's have a look at the news of week 41 and see what are the next trends. Please check out interviews with brilliant experts from ICIS published last week. I have discussed urea market trends with Deepika Sapriyal, Deputy Editor for Fertilizers, and phosphates market trends with Chris Lachopoulos, Senior Editor for Phosphates, so don't miss the jazz. Today, the weekly update will be really scarce, as nitrogen market is on its toes again in front of the Indian tender outcome this week. Trading activity was subdued across the globe because both suppliers and buyers are anxiously looking for price direction. That will be clear only after the tender. Also, last week, an important industry event, IFA Crossroads conference, gathered players in Bangkok and distracted them from the everyday business. There has no fresh information regarding potential extension of Chinese export quotas into November appeared as a result of the conference, though it was expected by participants. Now, it is a very important time in the year when European buyers usually start to step in the market before the main season, as well as other regions like Brazil and USA, to a certain extent, start to look for volumes. And with such high level of uncertainty that is related not only to industry factors, but also to wider international politics, it is really difficult to make any forecasts at the moment. In terms of supply, international urea market is full of products. So, from this angle, we should count on price decrease in Q4. But with tensions escalating between US and China, as well as effective actions of Ukrainian army hitting Russian fertilizers producing plants, we might see diminishing supply in the short term instead. And adding to all this, risk of global economic crisis makes demand picture even more gloomy than it is now, even with continuous affordability issues. So let's wait and see. There is not much that we can do. The only news of the week was scrapping of Ethiopian ABC tender for almost 500,000 tons. Ethiopia makes such moves when there is expectation of lower prices in the market, usually. Perhaps this demand will surface later, when price trend turns to more bearish, if it does, of course. Iranian producers were the only ones selling last week. The price was between $365 to $70 FOB, $5 lower versus previous week. About 170,000 tons of urea changed hands last week. Also in Indonesia, there were tenders awards issued last week for both granular and prilled products. Granular was sold $393 FOB, while prills at $385. Both prices are lower versus last concluded, of course. Ukraine suffered from the most severe attack of Russian terrorist army at its gas production facilities last week. For domestic fertilizers production, it means that gas supply this winter will definitely be scarce, as most of it will come from imports and will be focused at supply to households. So, most likely, Ukrainian fertilizers market will be even more import dependent in the spring season. Ammonium sulfate price modestly increased amid reviving demand from both Europe and Brazil. Chinese crystal copper grade product was sold around $140 FOB, while granular reached $156.58. European buyers are interested to import before CBAM kicks in, so some inquiries were floating. In Brazil, the demand also picked up a bit, despite oversupply of Chinese material. The CFR price for granular product increased to $175 to $85. Nitrates demand was completely subdued last week. In the ammonia market, activity was also limited, mostly contract cargoes were moving. European buyers are reluctant to pay over $600 FOB Algeria, that is the target for producer, so there were no fresh spot sales. In the US, direct ammonia application hasn't started yet, mostly due to warm weather. East of Suez, there was also little activity. Notional spot offers to India increased to over $435 CFR and more, but there were no actual sales. Contractual volumes continue to flow, but buyers seem to be worried about availability and price later in Q4 due to continuous Ma'aden outage. In phosphate segment, the downward price correction is ongoing. In India, APL has purchased DAP cargo from Australia at around $775 for October shipment. This is largely in line with previous week's prices, but bids now are already lower than that. The market is expecting new subsidy rates anytime this week. That will be the most important factor for future prices. India began October with approximately 2.4 million tons of DAP in stock, amid strong September imports and domestic production that outpaced offtake. Government support and long-term supply deals with Saudi Arabia and Morocco helped boost Kharif season imports to 4 million tons, well above average, offsetting weak domestic output and lower farmer demand, and likely covering most of India's DAP needs through year-end. Ethiopian ABC decreased inquiry to only 240,000 tons from over 500,000 in its latest tender. In fact, ABC scrapped the tender from September 16, reissued it on October 13, and that decreased the volume. So, really difficult to predict what will be the final outcome. Bangladesh received offers for DAP and TSP under the new tender after the stay order was lifted. There were no awards yet. In China, there were also no news regarding additional quotas, same as for urea. In Brazil, price level was assessed at $690 to $710 CFR for MAP, which is $15 decline versus a week ago. The demand is vanishing due to season end. In the US, there was almost no activity. Only one MAP sales was registered in NOLA, and price remained unchanged. Moving to the fundamentals. European natural gas futures hovered at the level similar to last week and reached almost 32 euros on Friday. Storage levels across the EU remain healthy at almost 83% of capacity. Still colder weather forecasts for mid-October, with temperatures in France and Germany about 2 degrees below seasonal norms, are set to lift heating needs. At the same time, Russia's largest wave of attacks on Ukraine's gas infrastructure since the war began raised concerns over potential supply disruptions and higher European exports to Ukraine this winter. US natural gas futures fell to $3.1 per MMBTU, pressured by ample storage levels and forecasts for mild weather through late October. Record high production earlier this year enabled larger than usual injections into storage, leaving inventories about 4% above the seasonal average. Still, average gas output eased so far in October compared to September. On the export side, gas flows to US LNG terminals increased versus September levels and are close to record highs reached in August. Agricultural commodities future prices slipped on Friday. Wheat futures fell below $5 per bushel, hitting a 5-year low as hopes for a US-China trade resolution faded. The decline came after prices reached a near 2-week high on Thursday, pressured by rising global wheat supplies, including an upward revision of Russia's harvest. President Trump's threat to increase tariffs on China and cancel a planned meeting with President Xi Jinping added further uncertainty for US exports. The dollar's weakness lifted the euro, creating mixed effects on European wheat competitiveness. Traders highlighted that French, Romanian, and Ukrainian wheat were well positioned to supply North African buyers, while Argentine wheat remained less competitive due to high shipping costs. Overall, wheat markets are being shaped by geopolitical tensions, abundant global supply, and shifting currency dynamics. Corn futures also dropped on Friday after climbing above $4.2 per bushel in the course of the week. Because of government shutdown in the US, USDA data is not available, so only private agencies' data is used by traders now. S&P Global cut its 25 US corn yield forecast at the beginning of October, trimming expected output and pressuring prompt contracts. US export inspection through the week ending October 2 showed robust shipments to Mexico and Japan. At the same time, strong ethanol margins boosted domestic crush and blending in the US. However, news about negative developments in US-China relations weighed on the general market sentiment, adding uncertainty, which resulted in price decrease. Soybean futures fell to around $10 per bushel due to the same reason. Market activity was further restrained after the USDA postponed its monthly supply and demand report due to the federal government shutdown. Details of the $10 to $15 billion aid package for farmers promised by President Trump remain unreleased, with assistance expected only once the government reopens, probably. Meanwhile, the Chinese Ministry of Agriculture maintained its 25-26-year soybean import forecast at 95.8 million tons in its October report. Upon returning from their Golden Week holiday late last week, Chinese crushers secured about a half dozen cargoes of soybeans from Brazil for December shipment. This continues to narrow the window where US soybeans may fill some of their import needs ahead of harvest in early 2026. Moving to the shipping industry. The Drewry World Container Index hovered at the level similar to last week, softening just slightly. Spot rates on the Trans-Pacific trade lane remained less volatile, reflecting a seasonal slowdown during China's Golden Week holidays. Spot rates on the Asia-Europe trade lane have recorded their 9th straight weekly decline, approaching levels prior to the Red Sea attacks. The spot rate for a 40-foot container is now at $1,577 from Shanghai to Rotterdam and $1,793 from Shanghai to Genoa. Drewry expects rates to continue to decline in the coming weeks. The Baltic Exchange Grain Index level was also almost unchanged versus a week ago. The Capesize market softened as a lack of fresh cargo and activity, particularly in the Atlantic. The week began on a muted note for Panamax vessels. Draft issues in the US Gulf, as well as talk of a slowing Ukrainian Black Sea program, impacted the North Atlantic. Meanwhile, in Asia, it proved to be a largely flat week. In Ultra-Supramax segment, despite the return to work for many in Asia, the arena failed to gain any positive momentum, with many seeing a lack of fresh inquiry from most areas and a build-up of prompt tonnage. For Handysize segment, it was a positive week in general, especially for the Atlantic basin. To sum up, nitrogen market is on the toes, waiting for the results of Indian tender later this week. Before that, both suppliers and buyers are reluctant to conduct any purchase, waiting for price direction. Additional supply from China was still not confirmed, and escalating tensions between US and China don't add confidence to market players. Ammonium sulfate price increased slightly due to more vivid activity in Brazil and, to a certain extent, in Europe. Ammonia price continued climbing amid tightening supply, however, spot activity was almost non-existent. Phosphate price corrected more downwards as Indian purchases seasonally decrease, as well as demand from Brazil. Natural gas price both in Europe and the US dropped due to healthy level of storage injections. Future prices for all crops decreased amid escalation in US-China relationship, which threatens agricultural trade flows. Container shipping rates hovered at the level similar to previous week due to slow business during and after Chinese Golden Week. So, let's see what is next around the corner. But it will be already next week. Thank you for watching. Please subscribe to the channel, put like to this video, push the bell in order not to miss any updates, and see you soon.